Well, some people think that silver is going to be the first element removed from the periodic table, that we're actually going to use it into extinction. And the reason that that fear persists today is, you know, number one, we only get 20% of the world's silver from primary silver mines. So silver is predominantly thrown off as a byproduct. So one of the biggest concerns is actually not on silver mines. It's looking at a copper mine or looking at some of these other mines that are having difficulty either because of permitting or large capex.
In a world increasingly reliant on silver, Shawn Khunkhun, the CEO of Dolly Varden Silver, sheds light on the burgeoning deficit the silver market is grappling with. A key revelation is that over 70% of the silver mining supply is a byproduct of mining for metals like lead, zinc, and copper. Higher prices for these byproduct metals act as an impetus for increased mining activity, essentially subsidizing the extraction of silver. Silver, prized for its exceptional electrical conductivity, plays a pivotal role in manufacturing photovoltaic (PV) panels used in solar energy systems. Solar companies convert silver into a paste for creating busbars and contacts, thus ensuring efficient electricity transmission within these systems. The demand for silver from PV cells, integral components of solar panels, has witnessed a remarkable threefold growth since 2014. Projections indicate that this demand is poised to reach 161 million ounces in 2023, a development closely monitored by the Silver Institute. This surge in silver demand from the solar sector is reshaping the landscape of the precious metal market. In 2023, the sector is expected to account for 14% of total silver demand, a substantial leap from the 5% share it held in 2014. ShawnKhunkhun emphasizes that solar panels are on track to consume a significant portion of the world's silver production in the years to come. Beyond the solar industry, the industrial sector stands as the largest consumer of silver this year, followed by physical investment in the metal, with a combined demand totaling 35,019 metric tons, albeit a decrease from 2022's 38,643 tons. Shawn points out a distinguishing feature of silver among precious metals: its extensive use in various industrial applications. This industrial relevance bolsters silver's demand and has the potential to drive up its price. Before diving into Shawn Khunkhun's interview, subscribe to our channel and give this video a big thumbs up.
Number one, we only get 20% of the world's silver from primary silver mines. So silver is predominantly thrown off as a byproduct. So one of the biggest concerns is actually not on silver mines. It's looking at a copper mine or looking at some of these other mines that are having difficulty either because of permitting or large capex. If we look at the fundamentals for some of these other metals, and we look at the supply setup for some of these other metals, if silver is being predominantly produced as a byproduct, and that copper mine's not coming online because you can't get community support in Chile, or you've got environmental opposition in the U.S., where are we going to get the silver? So I think that's one of the major concerns. And then the other part of it is you look at that industrial use that I said doesn't cause the big price spikes, but still we've seen one industrial application, just solar, right, go from being 5% of the silver market projected to be up to 50% in coming years. So if half of the world's silver that's being produced is going to be consumed by solar panels, what if you do have an increase in monetary metal stackers that are trying to get silver? Where's that silver coming from? 70 to 80% of silver gets consumed for industrial purposes. So there's a big differential between gold and silver in that measurement, whereas very small amounts, sub 5% of gold gets consumed in industrial use. So silver is actually more of an industrial metal than it is a monetary metal. So for the institutional investor, that's the important supply demand fundamentals. And you reference the Silver Institute and the the supply deficit for silver and the 250 million ounce deficit that we're faced this year, that would spark interest from an institutional investor, right? And what my experience has been with other metals is metals can be in deficit for up to 2 years before you see the price breakout. I look at the zinc market from just a few years ago. We had 2 years of deficits in zinc before we saw a significant move. So a metal can, be, in short supply for as much as 24 months. But, the way I look at silver is what causes these big moves and why, if I was an institutional investor, I'd be interested in silver. It's not for the industrial side. What moves the silver price is retail investors going out and buying silver because of its monetary history. And you look at that 30% of the market that gets bought up for the silver stackers who are buying it because it's poor man's gold and it's got all those same qualities that gold has in terms of a hedge against inflation, a hedge against monetary debasement, a hedge against systemic risk, right? That's what intrigues me. And if you look at what pushed the silver price in both the 1980s by the Hunt brothers or in 2011, it was based on major reflation. I'm watching gold break out in every other currency other than US dollars. And this reminds me, David, of 2019. 2019, gold was established as a tier one asset, and gold started its ascent from 1,300, and it went to call it $2,100 an ounce from the spring of 2019 to the summer of 2020. And now gold is marching back, and it looks like it's on its way through a new high in US dollar terms, like it has been going in every other currency. And I think we're on the verge of a silver breakout. Well, I think there's 100 reasons why silver is going higher, right? And a lot of those reasons are the same reasons that I think gold is going higher, right? You've got, record debt levels, you've got systemic risks in the banking system, you've got a number of reasons why I think investors will flock to gold and silver as an insurance policy and as a safe haven to hedge against systemic risk and currency devaluation. But I also think from the industrial usage, you've like I said, there's about 100 reasons why I think the silver and gold prices are headed higher, and the list is long, from monetary debasement to industrial demand are the two top reasons.
The silver market has recently shown a struggle to maintain levels above the $23 mark, ultimately succumbing to a bearish trend that has seen it approach the $22.25 level. This dip below $23 indicates a potential for fresh negative trades in the upcoming trading sessions, hinting at a period of short-term pessimism. The bearish sentiment is further supported by the price's position below the EMA 50, signaling a downward trend continuation. However, it's important to note that a breach of the $23 resistance level could mark a turning point, potentially leading to a recovery in silver prices. While short-term trends suggest a degree of uncertainty, Shawn's insights into historical price movements provide a broader perspective. Shawn predicts that, in the long term, silver prices are poised to double. This optimistic outlook is based on the silver market's historical resilience and growth potential. Let's get back to the interview.
Like when I think about silver and I think about like the relevance of silver, and we talked about why silver, why now, silver moves, and if we look at like the history, the three times we've had major breakouts in the silver price, it's been on the back of economic and fiscal change. And if you really study like the 1970s and you look at the price move from $2 to $50, it was on the back of major, monetary change. And then if you look at the 2000s, the rise from $4 to $21, it was, the advent of globalization, the rise of China. And then more recently, like 2008, the reflation trade, which caused silver to go from about $9 on a low to $49 on a high. It was on reflation. So I think, these short-term moves, the 10% move in the last month or so, I'm not really as focused on that short term. I'm more focused on the longer term play. Based on my experience with silver, like I've been around investing in silver for 20 years. So I've lived through, the 2000s, and I've seen that move to 49. I've seen the low of 11 to 30. So I've lived it, I've studied it. And what my experience has taught me and what studying history has taught me is that gold leads and then silver outperforms and overshoots. And I think when I study the silver market, I actually take away those two highs. You mentioned the $50, those tops, 1980, 2011. I remove those because I think they're noise. I actually look at where silver is right now, and removing those two highs, silver is actually flirting with close to all-time highs because those were spikes, right? Though I really don't count those in terms, and so I actually think silver's tracking really well with the gold price right now. There is no substitute for silver, but if we look at a lot of the industrial uses for silver have been more of a recent phenomenon. If you look at in the application in electronics, or we talk about solar panels, these are relatively new uses. If we look at the 5,000-year history of gold and silver, for so long these metals were money. They were store of wealth. That's what they were. And then it's only been in the last call it 100 years or so that these industrial applications are really taking off. But if we talk about relationships and ratios, there's a natural relationship in the Earth's crust of about 16 to 1. For every 16 ounces of silver, there's 1 ounce of gold. Now, from a mining perspective today, we're mining 8 to 1. For every 8 ounces of silver we mine, we're mining 1 ounce of gold. But the ratio today on the paper market, the digital market, is 80 to 1, right? And so, my bet is that relationship normalizes. Do I think it's going to 15 to 1? Possibly, but I'd be very, very content with a 30 to 40 to 1 ratio, which would mean a doubling of the silver price.
Silver's role is expanding across various sectors. How will the silver market navigate the short-term challenges while capitalizing on its long-term growth potential, as ShawnKhunkhun predicts that silver prices will double? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.